about everything that man has said. 10:40, guys. He ended it at 10:38. You got to realize that's a base root time, right? 10:38 is 3 and 8 is 11, 10, 11 and 10. You could say it's 12. You could say 111. That's a 3. And then what's today's date? Just curious. 8, 4, and 9. Interesting. 8, 4, and 9. 21. 21's 3. The date and the time was a base root sum of 3. By the way, that's exactly how I trade. Also exactly how I trade. And I loved hearing ICT talk about time-based ranges. He's stitching together 9:30 to 10 o'clock, but then 10 o'clock to 10:30, because that was the silver bullet last year. So like what I teach, I just so validating. It's not like what I've learned is the best way to say it. What I've learned, the DR, the defined range, the opening range, the initial balance, whatever the fuck you want to call it, I don't care. It's a time-based range. And I heard ICT today really go in and talk about time-based ranges. And I love it. It really, I mean, it chapped my ass a little bit listening to someone who claims to not trade time, to belittle folks who trade time, to come out with a quote unquote time-based range. And I mean, it's just, I find it interesting. But more importantly, it's very validating as a student. It's very validating listening to what ICT has said today. Because, I mean, if you can stitch together the first presentation fair value gap with the silver bullet, I mean, you've got the defined range. You've got the DR. Now, you guys might not know it as that, but it's the DR under a different mentor who is M7, who, has disappeared, ghosted, didn't show up at Robbins, didn't really do shit, hasn't said anything to anybody but his own students. That's his prerogative, and, whatever, that's him. He's fallen off. It's nice to see ICT on Front Street talk about time-based ranges, talk about the first hour of trading. All of the data for the session, guys. Like, I don't think you understand, as someone who really parses and combs through statistical analytics, data analytics of this same range in detail over the last few years, just how validating it is to hear ICT really bring all of this stuff home. I mean, I don't know. That's my take on it, guys. I just want to give you it quickly. I mean, I love trading time-based ranges. My entire edge, anyone who's traded with me, anyone who's watched my live streams knows I trade purely time and time-based ranges. A DR is a time-based range. A macro is a time-based range. Every 50-10 you can run as a time-based range. Every 20-40 you can run as a time-based range. Doesn't mean every single one is going to work, but you want to offset. You want to look for that failure swing in a macro for it to distribute to the other side. You want to see that breaker form in the macro. A lot of you guys might actually think, hey, at 9:50, I need to click the button because that's when the macro is. No, guys, I did a 9-minute video. It's on my timeline. I added it. What you do is you track and measure that impulse in the market. You track and measure that individual impulse. Now, if it forms an FVG, awesome. If it forms a failure swing, if there's a specific OB, it doesn't matter. But those times you can treat that 20-minute as a fractal range for your hourly, 2-hour, 3-hour potential movement. It's not just simply, hey, 9:50 to 10:10. This is when I got to click a button. No, you take the high, you take the low, you take the highest open, you take the lowest close. You take the midpoints, you take the standard deviations. You look for when it's actually broken from one side to the other. What's the relationship of the open and close of the 50 to the 10? I mean, if you can make a macro, a quote unquote DR, but I'm not referring it to a DR because DR is something M7 does. TBR is something ICT does. And folks within the community of ICT understand, right? A time-based range. All of us are trading some element, some form of time. If you are under the tutelage of ICT, There he is, my man. We're talking about TBRs. We're talking about time-based ranges. I love seeing you in here, buddy. Um, anyway, this is all about you, the listener. I want to hear what you heard in listening to ICT. As I mentioned before, I feel so good listening to ICT refer to his tutelage as a time based range. It's something that I've just resonated with and really worked towards in identifying and creating my own identity, right? Like, okay, I'm doing DR, but is it DR or is it really just a continuation of the same stuff ICT has been teaching? The way M7 teaches DR is through data analysis and statistical analytics. I trade price over live price action. I need to see and read all of the candlesticks, whether it's on the lower time frame or higher time frame, exactly as it's been taught by the man himself, ICT, Michael. I know he prefers to be referred to as Michael versus ICT. Um, I think these days, but more importantly, the follow through, getting your thoughts, your feedback on the way he's really stitched together the first presentation for a value gap with the silver bullet. To me, today, hearing him do that, referring to the time based ranges, like that puts together the whole hour of trading, which is really something I've resonated with for quite some time in trading the way I trade and studying and deviating from the live price action to really understand the data and having studied in depth under M7, I was really able to externalize the candlesticks and look at the data that the candlesticks are forming on a spreadsheet. And if you've ever worked with, you know, large amounts of data, or I mean, I worked in construction, so costs were a thing. I always had to manage these big spreadsheets of costs and cost codes and everything else. So when you're able to extrapolate or you're able to look at the same thing, not just the history, but the statistical relevance. Like I can tell you, I've codified scripts that will tell me that at exactly 3 o'clock to 4 o'clock, that my average manipulation on NQ is going to be 49 points. I already know that. I already know that the opening range of the ODR 3 to 4 o'clock averages 49 points. That's over the last 75 days, 75 sessions of the ODR. Just like the average manipulation within AMD on NQ during, I say the ODR, during London, 3 to 4 o'clock silver bullet, that manipulation is an average of 95 points. So at the open of 3 o'clock, I can start looking at, are we accumulating at a 50-point value? Are we displacing at a 95-point value? And then if there's a distribution, which could be statistically of 191 points to 284 points, I'm looking for that distribution to come out of London. And then I even am tracking the times 355, 651. Having these things codified already to where all of the math has been applied, and then it's coalescing this data that I'm able to apply to the chart real time. What that has done for me and for folks that trade with me and folks that trade this style utilizing statistics, it adds an exhaustion to these displacements. It adds the ability for you to identify whether you're in a legitimate reversal, retracement, expansion, or consolidation. The price mechanism that ICT is very clearly, that Michael's very clearly laid out within algorithmic theory, right? We're all trading algorithmic theory. That's the beautiful part about it. I love it. Anyway, we got Gordo here. We got my boy Neil here. We got some special guests in the audience. We'll just keep that, on the low. But I want to follow up. I really want to hear your thoughts or 2 cents. I thought it was beautiful today, and I love the passion of really stitching together the first presentation fair value gap with the silver bullet. And I was yesterday, and I'll say this in front of you, Michael. I don't mind saying it. I was critical of the silver bullet in the space I had yesterday. And just saying, hadn't seen a lot of people really win with it, hadn't seen a lot of people trading it, and that my model wasn't really to be taking that trade. But the way you stitched it together and then the logic that you put with it and how it's naturally been the evolution of exactly how you trade TBRs, exactly how you suggest and recommend people kind of attack and frame how they're going to move in the market, right? I love it, man. It was such a really good kind of aha effect for me. And then, like I said, just so validating the first 30 minutes, stitching in the first hour. That's really been just so much of what my personal focus has been. And it's just today was validating for me. So I want my follow through, my 2 cents, opening up the conversation with everybody here is saying, like, hearing ICT talk about the N dogs and N wogs, they're so powerful. They're time based. It's a time based range. You can throw fibs on that. You can put CEs. You can throw PO3 fibs on that. You can throw standard deviations on that. You can project the actual gap with Feigenbaum, right? You can take the actual gap and project that. It's crazy how you can measure anything. Anyway, I want to get your thoughts or 2 cents. We had Neil come up here first. We got Gordo here as well. We got a bunch of folks here. Nice to see you here. Welcome to Trader Roundup. This is the ICT follow through. It's your boy Kit here live streaming on X and YouTube pretty much every day, trying to follow the assignment, right? Neil, what's going on, bro?
Yo, what's up, kid? How you doing?
I'm doing fan-fucking-tastic. What a great day.
Yeah, it's been a good week. It's been a good day. If I'm out of breath, man, just have to, excuse me, I'm out doing a little ruck this morning trying to get this desk job's making me soft. So,
Oh, that's good, bro. Well, I mean, it's not good that you're getting soft, but it's good that you're out for a run, my man. I love hearing that. Did you get a
yeah.
chance to hear ICT's kind of space this morning? And did you have any, like, what's your reaction?
So, I always tune into these, but the whole house is waking up. So, of course, there's distractions. I got my little guy, running my ear off about whatever he's thinking about. But we've been talking about time-based ranges, which, us for a long time. And if we look at it as it just being a function of the algorithmic delivery of the mechanism that's driving the market, if you create a baseline, I mean, this is like statistical analysis on it. If you create a baseline range and we can start taking measurements off of that range and start applying our algorithmic logic to that, like you were saying, we can start measuring when and where we can expect some exhaustions to occur. We can start using this in the basis of like a market maker model. Where should we expect a consolidation to happen? When we get the consolidation, where can we expect a retracement on a manipulation leg for it to continue further to whatever target of liquidity that the algo is targeting? And I'm gonna have to go back and listen to it again because, of course, as with anything, it's a information overload at first because you're trying to take it all in, like wrap my head around a lot of this.
No, I feel
And
you, brother. I feel you. I feel you. For sure.
yeah, and it's like a doctorate level presentation.
It's a lecture from your professor. That's just
That's
what it
right.
is. It's a
So,
lecture from your professor. And when you hear certain things that he has to say, and I'm like, bro, I've been following these. I've been doing it right this whole time. Like, I didn't like it's validating, bro. Like, I'm just here to
mhm.
like, just like I'm like pumping my fist, like high fiving. Like, I feel so validated. Just like this is the shit I've been doing, bro. Like, I mean, but I say if I feel validated. I mean, my model is wrapped all around personally charter price action model 5 with the standard deviations, right? The 2.5, the 4.5s, right? I really like seeing a doubling sequence. Again, there's some Feigenbaum constants that I like to incorporate within my own trading. So the 467 is nice, the 2.5 is nice. And I'm looking for doubling sequence that occur off of these time-based ranges and or reversals and or retracements. Every single one of my trades is going to be either a retracement from an extension back into that range. It's going to be a reversal, maybe from like a 2.5 down to another 2.5, right? It might be an expansion that comes off of, a -1 that's going to go up to like a +5, right? Close to. But charter price action model 5 and then the MMXMs 6 and 7. I highly suggest any of you that are interested in really understanding standard deviations in the market maker models that are based within these time-based ranges that are being outlined. I mean, he's really going over the simple things, and I say that he's trying to make this simple and let you identify simply with a rectangle tool and your reticular activation system how to see these FEGs. In the first presentation FEG, let me just tell you, I've heard so many people find success and get payouts just utilizing simply that. I mean, keeping it real more than the silver bullet, but that's just me and my 2 cents, my feedback, right? But the first presentation fair value gap, boy oh boy, in London, oh boy, that is. I mean, I trade London and I trade Asia and gold now, constantly. But anyway, Neil.
But yeah, yo, I want to add on to you what you just
Yeah,
said.
brother.
It's the thing about it here is that what we're doing with this, what we've been given, it requires more than just the moving parts. You know what I mean? Like he has given us a very, very strong, very accurate, and very consistent tool to work with. But if you are not understanding the narrative, the draw, where is liquidity, which liquidity is being targeted, because you have higher time frame liquidities, you have what we call midterm liquidities, we have short-term liquidities, we have liquidities on the 5-second chart, and people want to laugh and giggle if I post a chart with 15 seconds or 5 seconds or a 1-second chart, like, oh, ha, ha. No, it's working its way through the ladder of time, through these ladders of liquidity levels. You have to understand the narrative. You have to understand the draw. You just can't take this, plug it into the wall, and play with it and expect to get anything out of it. You have to have the narrative. You got to have what is happening, who is getting fucked, and who is doing the fucking. If you start putting that all together, you are not going to find a system that works better than what we've been given. And we will be giving this shit for free. Bro, like y'all don't get it. This shit is fucking free. All it takes is time and sweat equity for you to go out and get whatever you want. Whatever you want to achieve is here for you. You just have to put in the sweat. You have to put in the time. You got to be patient. First presentation fair value gap don't mean enter that bitch as soon as it forms. Like it's not going to be like that every day. You have to have patience. You got to have understanding. You got to have self-control. You got to have an entire plethora of what I would say a recipe to make this work. You're not just going to take one item out of this recipe and expect to get anything out of it. You have to cook the entire fucking meal for you to eat. And that's what people don't get. And they don't get it and they start talking shit about it because they don't understand it. And they think that they're just going to take the salt and run with the salt and get something out of it. You're not. You need the pepper, you need the meat, you need the potatoes, you need the vegetables, you need everything that goes into this. You need the entire recipe. And if you ain't cooking with the entire recipe, that shit gonna leave a bad taste in your mouth. And with that, kid, I'm out. I love y'all. I hope y'all have an amazing week coming up this week. And you know, much respect to the teacher, Michael, big bro. I love you. Thank you for everything you've done to the community. And I wish you and your family all the best.
Beautiful. Nice hearing from Neil. I got Gordo coming up next. Gordo, you there, brother?
What's going on, kid? Good
How are
morning, my
you
brother.
doing? Thoughts and feedbacks
Um,
on that on the space we just had. What did you hear? What resonated with you?
my brother, where do I begin? There was so much sauce given today, right? Like so much information. Michael went out of his way today. He really blew it out. He did a mic drop. Closed the space
Bro, he did a
and
mic
said,
drop on the
no,
vortex on
yeah,
the base route summa 3. You gotta love it, right? Like, I mean, he has to know, and I know he knows because we talk about it here. I mean, we're all over. Tesla numbers, vortex numbers. We're all over times that have to deal with base root sums with 3, 6, and 9. We see the signatures in the entire YouTube page. And that mic drop was so well timed, especially on a
Yeah.
day. If you were to add up 4 with 2, 6, and then the year being a 9, 4, 6, and 9. Well, no, it would be 8. Before 8 and 9 gives us still a 3 at, was it 1038? The 10 is the 1 and the 38 is 11. That gives you 3 as well. So you get 3 and 3. So the time and the date was a base root sum of 3. And price moves in a very similar fashion. So he's aware of that, and very subtly with that mic drop. It's just beautiful. I love it.
Yeah, my brother.
Poetry, really.
Yeah, it was definitely a great space. It's for the books. What I got from it, right? As he started, he was joking around. He, in other words, he was basically telling us he was a swing trader, right? At one point in his life, right? In his career, where he was trading the higher time frame. As you know, I am a swing trader. I love the higher time
Yes,
frame.
that is your zhuzh,
Uh,
brother. And you do a
and
great job with it.
he did mention, he was not dropping below the 1 hour chart, right? Um, and then he got to the macro, the 950 to 1010 time frame, which is where these draw on liquidities usually happen. During either a New York session or a London session, correct? But to me, what I really got from it was just what resonated with me at least was that I'm on the right path in trading the higher time frame, and that you shouldn't really care about what other people think about your trading, right? As long as you focus and you stay disciplined enough, your time will come. It's similar to what we were talking about yesterday in your space, right? Discipline, having the patience. But for what I gathered and what I got, what resonated with me was that he mentioned that he was a higher time frame trader, and that you shouldn't really give a fuck about what anybody's opinion out here is. And with that said, man, thank you, Michael, and great fucking space today, my brother. I really appreciate it. Thank you.
We got lots of folks here. Energy's high, feeling really good. Want to keep the conversation going. Brooklyn's got his hand up. Brooklyn Balla, 32, WWE. What's going on?
What's going on, brother? You know what? I just want to get your opinion because I have very little knowledge on trading. This is
Oh,
what I do.
okay. Okay. So you're a new guy. That's good.
No, but tell me what I'm doing is right because it's making me nothing but money. I tell my accountant, buy any stock at $10 and put $10,000 in it. And I said, every time the stock drops below 6, buy another 10,000. If it goes to 12, don't even touch it. So every time it drops, I double my equity, and it just keeps doubling and doubling and doubling, and I never sell. I just keep it going,
Okay.
and
That's
it's
great. Did you listen to the ICT follow up? Did you listen to the space, my G?
no idea. I came in late.
Okay. Well, we're focused on that today. So I really think that's great that you're doubling up and you're making money in the market, and good for you, bro. High five.
So that's
All right.
stupid thing to do.
Conversation today's on the follow through on the conversation ICT just had on the space.
So it's not stupid what I'm doing.
Bro, whatever. If you're making money, you're making money. I don't know what the fuck you're doing. So I wish you the best. Good luck. And oh yeah, man, I double my equity. Am I doing it right? Yeah, I think you're doing it right, bro. Fuck off.
It's working.
Guys, I made twice as much money as I put in the market. Am I doing it right? I don't know what I'm doing. Anyway, back
Oh
to
my
the
God,
conversation.
I'm dying. I'm dying, kid. I'm dying.
All right, no, that's okay. It's a mixed bag. You never know what's going to happen when you let people up. So
Yeah, if you're making money, you're doing great. You're killing it, bro. Keep it
yeah, good
going.
for you. That has nothing to do with the conversation at hand. Let's get back to the conversation. I got my boy Focus here. Damn, haven't heard from him in a minute. Grandmaster. Let me we're having a conversation with you right now. What are your thoughts and 2 cents? What did you
Oh,
hear in the ICT space? I heard a lot of sauce, a lot of
I heard a
validation.
lot of sauce and bro being really funny today. I loved it. The best part was when he's like, "You could just fade me when you figure it out," and then the space ended.
It is beautiful. The mic drop at
Best
the end
ever.
was chef's kiss.
God has an amazing sense of humor for sure. Um, I just wanted to shout out to the beginners and the people learning here. Don't give up. All these little PD arrays that Michael's giving us, they all bang in the higher time frames. I'm telling you guys, if you take these PD arrays and apply them to the higher time frames, when I figured this out, I'm like, how does this guy get his trade so perfect every time? Why are they so mint every time? Why do they just deliver? Why is every PD array unfolding one after another? Holy moly, it's the Charter 13 model. It
Oh, you
drops.
like the 13 model? I like it.
I'm oh man, so I am down with that model. I love when it 8:30 or 9:30 or 10 it's dropping into the higher time frame discount array if I'm bullish. I'm in there. I don't care what time frame it is, sub 1 minute, 5-second chart. I'm recording that stuff and I figured it out. That's it. If you want to know, you see the reason why people aren't being patient is because they don't know what they're being patient for. You
Oh,
think just
bro, you
because
just
there's a
said something that's huge, and I just want to build on that for two seconds because I'm going
please
to add
do.
value to this, okay?
Yeah.
All right, so when you hear about a macro, a 50-10 macro, yes, you could click a button on a 50. Yes, you could ride that to a 10. Or you could track the open of the 50. You could track the close of the 10. You could track the highest body and the lowest body. You can capture the volume there. You can then throw standard deviations on the highest body and the lowest body of that
Yeah.
50-10 macro. And then you could look for a failure swing. Then you could be trading off of a standard deviation. I like trading off a standard deviation. That's my model. Price action model 5 is far more in line with how I trade in MMXM. That's me personally. But I did a 9-minute video. I put it in my highlights on the 2:33 to 3 o'clock macro. Was never technically introduced by ICT, but it was in his forums back in 2014, 2015. FX for Living, a good buddy of mine, solid ICT trader. Him and I had met live and we talked about, like, I've been tracking and trading. I found this macro. It's like I've been tracking and trading the same macro. So it was validation amongst our peers where and how we were kind of trading it. But I just wanted to add that quickly, right, brother? That if it's not
Yeah.
just simply click a button at a 50 and think you're going to ride it to a 10 and that's it,
Exactly.
track and measure that impulse. You can track and
Exactly.
measure the 2:33 to 3 o'clock impulse into 5:45, into 6 o'clock, into the 850 macro, into the opening range, into the silver bullet, right? Like, so you can track one single impulse in the market as a macro, as a time-based range, and then you can apply the models that ICT is very clearly and succinctly given you. Take your pick, whichever one, right?
Yeah, especially when they start materializing one after another. And I've noticed that. So you take your order block, you take your fair value gap, or whatever model that you gravitated toward, and you go into a daily chart. If that price and your current market price is dropping down into an order block, the 1 second time frame is likely going to comply. Then it's going to bleed off and fractal off into the higher time frames. I'm telling you guys, if you're allergic to higher time frames, this is why you're missing the boat. When I was studying this, didn't realize what I was being patient for. That's why I was so impatient. Now that I figured out where the precision comes from, now I know why I'm being patient and why my trades are just awesome now. Thank you so much, Michael. I love you.
Master friend, how many trades are you taking in a day, in a week? Just curious.
In a day or in a week, so
Yeah, how many bullets do you afford yourself for to allocate that precision within your own
so
growth and evolution?
I got a 3 shooter. I'll take 3 shots at looking to capitalize on the daily range. If if I'm gonna mitigate any losses incurred that day, I got a single shooter in the safe where if like, so say the daily's bearish and it's dumping and I was looking for it to go bullish, at the end of the day, I'll look for a retracement back into the range to mitigate that loss if it's hit a higher time frame array at the end of the day. So 3, but maybe 1 depending, or if I hit my max loss for the day.
Okay. So 1 to 3 bullish.
Oh,
How do you engage with price, brother?
sorry, you cut out there, bro.
I was saying, how do you engage with price? Like
So
what
typically,
session are you looking at?
oh man, so how about this one? And I got receipts. It's on my YouTube channel. I was looking for that drop into the new day opening gap, and it happened in London instead of New York. So I used to stay up for London session. I used to stay up for New York, and then maybe nap. I just forget all that, man. I'm just straight up in the New York session. I missed my trade. I think it was Thursday or Friday. Here, just let me take a quick peek. I want to be accurate here. Yeah, it was Thursday. I missed that drop into the new day opening gap because it happened while I was sleeping. I took a tiny little scalp with the order flow to the upside, and then I just shut her down. So New York session, if it hits my discount array at my time, I'm holding for the whole freaking day. Awkward pause, love it. Basically, I'll be running a time stop. If I actually get my model and it drops down there and rips up, then I'll run a time stop to about 3 to 4 p.m. depending on if the premium, if I'm bullish on the day, if the premium rate has been hit. But yeah, thanks again, Michael. Man, I love this so much. I'm wow, speechless. I'm good here, Kit. Thank you very much for letting me speak. I appreciate it. I don't know if Kit lost connection. Y'all give me a thumbs up. Can you hear me?
Yeah, I can hear you.
All right, cool. Yeah, I don't
Hey,
know if Kit.
hey, kid, you there? I think you might have dropped.
Well, he just say, "Good job, master friend. Thanks for speaking. Let's keep it going." Who else wants to speak?
Uh, hey, kid, can you hear me?
Let's just keep it going, everybody. Anybody else want to speak?
Yeah, I can jump on. But can everybody hear me? Can I get a thumb up, please? If everybody can hear me.
Yeah, bro. You're
Oh,
good.
oh yeah, yeah. I mean, so much sauce dropped. This is something we have. I done so much space. Come on, and we talked about time and price and the importance of. I think in the beginning when we first hear time, right? As trader, because I think when we go to our evolution as trader, we first focus heavily on price, but it takes time to really combine those two. And once you see it, you can't unsee it. So the importance of a new trader, the importance of continuously coming to this type of space and absorbing this information, and then as you do so, go to the church and look and just look, take time to look carefully at what is Michael saying, what is it pointing out, and I kid you not, that I actually say the thing, one of the really the reason why some people don't really gain the take a lot and then can apply some of the thing that is being said in those spaces, because the goal is to use it as a library of information where you want to pick, you come to a buffet, you pick pieces of things that you know you can connect it and relate to, and then apply it and test it, and create something of your own. Create something that match your personality, the way that you view the market, and you can only find this through experiment. For me, I mentioned this in multiple space before, time-based range, right? And time alignment with the 15 or 1 hour fair value gap, right? Or measure liquidity pool, like previous day high, previous day lows. Along aligning myself with an entry within specific windows of delivery, which essentially are the macros, anywhere between 9:30 to 11:30, which is to 12:30, and looking for an entry as a unicorn breaker. And I typically look for low resistance liquidity run all the way up into some type of major psychological level or previous day high or session liquidity, right? As opposed to my terminus and my target for my entries. But time-based range is something that if you first train, because that's where I really begin refining my system and something that I heard throughout the space when I could have related to, right? It was very easy for me to gravitate towards that because when you come into the market, you have to try and figure out a way. How do I develop a bias to understand where price is going to go? You need a point of reference for that. So for me, the thing that was easy for me to grab onto and gravitate towards when listening to Michael was time-based range. And then I experimented. I figured out, okay, what is something that I can consider a time-based range, something that I can utilize, that I can come into the market every day, and I can bring me some level of objectivity. And that's what I resonated with the most. And for other people, it might be different, but that's something that you need to figure out. Like pick two, three things, and then try to gravitate towards that. Once you have that, that will be like the first step, which will be helping you develop a bias, helping you identify, okay, where do I think path is going to go based on X? And once you figure that out, using higher time frame, we talked about higher time frame heavily, right? If if you have not heard about this time frame alignment, heavily talk about that. If you're trading on the 1 minute for an entry, for refining your entry, your alignment going to be the 15-minute time frame. 5 minutes is going to be the 1 hour, 15 minute, 4 hour, and those can be slightly interchanged or added on. For the 1 minute entry that I use, I typically sometimes pick a 1 hour to 15 minute fair value gap for the level, the high time frame level that I look for price to trade into prior to looking for reversal. And I look for some level of low resistance liquidity along with my terminus target aligning. But there's so many nugget that I drop, and I'm just giving you guys kind of like what I utilize when engaging with price, and then just giving you how lots of lots of the things that he gave in this previous space, he talked about it prior so many times. But you have to pick and just pick whatever you feel to connect. Like if something just resonate, you're just like, wait a minute, I've seen that before. He mentioned this, but I've seen this happening in the market. Focus on that and then take it and go experiment, right? Take it and immediately go just let me go check. He was talking. I was actually doing some back test super early in the morning, and I was just picking back at some of the older stuff that I was used to listening about time based range when going through some of the old series in his previous mentorship. I think 2022 and 20 and then prior to that as well. And I mean, it just brought back so much memory. But that's what I would really add on to. I wanted to add on to. I don't want to take too much time. I just want to point that out for anybody else listening. Maybe that might be brand newer and they might be looking to optimize and build a model around ICT. The most powerful thing that you can do is taking time to listen, pick whatever you feel you resonate most with, and but act on it. Right? Experiment, test different things, and to that, you're gonna start figuring out what is going to be a model. But for me, I would say is bias, high time frame, and now key level, right? Time frame alignment, right? Because you need to be organized in a way that if you go from the high time frame to the lower time frame, how do you align your high time frame key level with your entry, and then time, right? You need to consolidate all that to find your entry within specific pocket of time, right? 50 tens, we talked about that so many times here, right? Within a specific kill zone. So that's really all I have to add. Um, like I always, I hope this is insightful and value adding. I think we have focus here, and then hopefully
Yeah, can you guys hear me? I'm back.
Yeah, we can hear you.
now we can hear you now.
Yeah, I'm sitting here talking to a muted mic the whole time, and no one could hear a word I said. But just to be different.
Nah,
X is undefeated.
X
So
undefeated, man. X is undefeated. No.
friend was holding it down though. Master friend was holding it down. Like, it's kind of an awkward silence here, so we'll just keep it going. Fariano, thanks for the gems. Fariano definitely utilizes a multi-time frame alignment. He's a huge fan of liquidity and also utilizing macros. He's been trading within his own edge a time-based range. And I like ICT traders to refer to how they trade when they are trading time. I personally, I mean, I've been trying to utilize the TBR, and I mean, when Dave FX fucking came out and tried to start teaching quote unquote time, but then started talking shit, man, I don't even like bringing up his name because I texted him and called him and he has not responded. So I'd much rather have this conversation with him before the rest of the community. But that motherfucker don't trade time. Don't trade no time-based range. Goddamn motherfucker. Anyway, that's my 2 cents. I had to let that steam out. I've been holding it in for a minute. So I'll do it here on the space. And again, it's nothing I wouldn't say in front of him. But yeah, the ICT community trades time. They trade time-based ranges. I love how the NWOG was brought up as a time-based range. It is so powerful. It's like, holy shit, that's such a powerful concept. Just the introduction of that in 2023 alone can add so much to your trading and bias and direction, and the idea of a pivot, of a retracement or a reversal or an expansion off of that data point, that time-based range, that gap. Anyway, I want to bring in my co-host, Focus, brother, the MMXM trader. How are you doing?
What's going on, kid? How you doing, bro?
Long time, my friend. Long time. Nice to hear from you. What's going on? And what's your thoughts and 2 cents on what you heard?
ICT is a wise teacher, and just want to emphasize to everyone on here, it's all happening for you. Just keep going. I promise you more will be revealed. And another key point, there's nothing new under the sun, right? Everything operates on time. Everything. Look at the seasons, look at the eons and aeons. Like everything operates on time. There's an axis. We look at time and price because there's two axes. But if you look in different mediums, price won't be there, but there'll be some other form of metric that's being measured. But time is always the constant. Um, the price continuum, the continuum algorithm, the delivery sequence. I can't say it. I'm getting tongue tied. The price delivery continuum. Like there's nothing new under the sun. It expands, it consolidates as a reversal, it retraces into that consolidation. From that point, it will consolidate again, which is an accumulation at a discount price or fair value to expand again, right? Every single candle is a time-based range. That's why I go from a 12-month candle down. What was last year's price? What did it offering to this year's price? Like to me and all this nonsense with tariffs, it's nothing new under the sun. Took last year's liquidity into the order block that resided at 50% to accumulate, right? Passover week was nothing but an inside bar for last week to run on sell side on Monday, engaging that liquidity that was below 50% of the previous week because that inside bar didn't take liquidity. So you're still inside a range. How do you define a dealing range? It's buy side and sell side being taken. So if no liquidity's been taken on either side, it's an accumulation. What comes after accumulation? Expansion. There's nothing new under the sun. We fractalized these ideas and how he went down into the one. I mean, that's my whole premise, as you know. One trading setup for life video. I've probably watched that video over 500 times now since he's put it out because it means so much to me and I have to re-emphasize it to myself as I look at a 5-minute chart and I look across how I've got an indicator that plots the sessions just so I can see it and tell myself the story. What is the candle by candle relationship on the daily per what I'm looking for on the weekly, right? How am I looking at a 1 hour candle on a 1 minute chart defines to me so much because I fractalized the idea that he said if you take the 1 hour chart and you treat it like the daily, a whole new world opens up to you. And I challenged myself from that world because it's time based. Now, what happens if you do the same thing to a monthly delivery sequence? And first half of the month delivers for sell side, creating the sell side of the curve. For now, the second half of the month to change in the state of delivery, offering below the open price to now flip and run buy side back to fair value, which was the opening of the month. It was the fairest value of the month before all the trading started happening. So it just built the other side of the curve. You treat that in the 1 hour aspect, same way. That's why when I'm looking at the end or the beginning of an hour, what's the next framework that's going to happen? It's going to engage liquidity through like a 2022 model. It's either going to be a breaker or it's failure swing. And then from that newly created imbalance, that's the footprint. The elephant has now stepped in the pool. I now have permission to accept risk because I have a defined range that I can accept that risk on. And that footprint defines to me, cool, I'm on the correct side of the next momentous move. And the macros just allow me to keep that sequence in order, hour by hour by hour. And if I'm walking from the one trading setup for life, like he was talking about, looking for London high or London low, how the AM session is performing and what it's engineering, because it's always engineering. Always and always, it's engineering, just like God is. Always and always, He's engineering. Everything is happening for you, not to you. It's what do you choose? It's giving me a better price. Thank you. It's giving me a deeper discount. Thank you. But it's a read. You have to become so comprehensive of it. And this is something I've been taking into con- contemplation and meditation is it's not that I'm cocky, it's that I'm comprehensive of what I'm doing. I know what I'm looking for. I don't drive up to a red light and just, all right, I'm going. No, there's a process that must be adhered to, an etiquette like he talked about that must be adhered to so that the system may run smoothly. Because the laws of thermodynamics explain to us, A, nothing can be made from nothing. Everything comes from something, right? And then the second one is that everything that is in a cohesive pattern always breaks down and will come out of cohesion back into chaos. And then from chaos, it comes back into cohesion. Just like you see the human body, it's born, it's beautiful, it decays and it dies, and then start the process over again. There's nothing new under the sun. Those are in my world, in my eyes, those are the moments of manual intervention, that chaos that erupts, clear the board, right? And through that, if I can continue to read price, I'm reading it like a book, candle by candle by candle. Because if this candle did this and it created this, now this is that, that means this is then this. I'm reading it like a book. I'm not trying to guess what the next chapter's about. I'm just reading it and enjoying the story. And I know when this next leg is about to happen, specifically, it's either a breaker for me or it's a retracement back into that 50% in the order block that resides there because that's where the next level of expansion will occur. And I know on the menu, I want to order expansion. That's what I want. I don't want the fish. I don't want the shrimp. I don't want the steak. I want the expansion, and I'll wait for the expansion because that's what I want. And it at first was discipline, but then it just became you it's comprehension. It's this is a level that I just know what I'm looking for, why I'm looking for it, and when I'm looking for it to happen, because there's nothing new under the sun, and everything else from that is just like he would talk about of us getting in our own way. It's me as a spiritual being having a human experience and all those layers of my subconscious coming to the surface to be examined, to be looked at. What do you choose? Yes, they've happened to you in your life before and they put you in an emotional state now. But what do you choose? Do you continue to live in that paradigm, or now that you see, forgive me for I know not what I do, and I can choose different? But the element of time is our secret weapon because it's the constant. It's the constant in all things. And if you continue to go through, like he was talking about with first presentation, fair value gap, powerful. Why? It's a time based element that shows the footprint. And from that footprint, now you can develop narrative. And the narrative, where to? The liquidity, nothing new under the sun. It's either creating imbalances and order blocks to run on liquidity. That's what it does, right? That's the shake and bake. That's the Ricky Bobby. That's it. It does that thing over and over and over and over again. You can fractalize it high or low, but it's going to continuously repeat that phenomenon because there's nothing new under the sun. This is human activity we're witnessing, right? It's just the human experience on the chart. And those time-based ranges being that every candle is a time-based range, and how to utilize that like a technician, right, is through comprehension. And that's what I've gotten the most out of the 2024 and 2025 that I continuously keep going through and listening to is that comprehensive nature of how do you utilize a fair value gap and why and when? right? Because you're becoming such a technician with these key components of comprehension. And going through that process and constantly journaling about the feelings that come up, because that's just information for you to learn more about your mystery. And as you can unravel some of the distortions in your body, the signal becomes stronger and you get clearer on the things that you do want and the things that you don't want. And you can develop a deeper conviction like he was talking about. Man, that roared me up when he was talking about just doing you and just focusing on that process and submitting to the time that all this information is going to come before you that you can utilize to create such a beautiful, beautiful architecture of what your life is going to look like in the future. Right. And that's a skill. We learn it here on the charts too. How do you develop a trading plan to root yourself in a decision, to hold faith that that's going to deliver through the storm and watch it and then stand in gratitude once it's delivered? Right. And reflect on the experience. Like that's the same thing we should do as life in life and practice that skill set, the gift of discernment. But the time-based range aspect that he went over, I mean, that's the key component that I found because I couldn't find faith in anything else. Everything else kept failing me, and I thought it was me failing the charts, but it's I'm not showing up on time. And as soon as that component aligned, oh man, I was making it so much harder than it needed to be because the fractalization as I went lower and lower, I'm going to figure it out. But it's right there staring you in the face. Like he talked about in one of his Twitter Telegram posts. He said, if it jumped out of you right now, you wouldn't even recognize it. You wouldn't even see it because we get so drawn into that, like a pit bull with this pink thing hanging out. Like you're just so anxious. But that in itself is just information telling us how we experience things, and we need to discern and look at that and see look at how this affected me and that affected me. Now I can utilize this information to become more of an effective person and go after my dreams in an effective way and know things that trigger me in life, because the things that happen on the charts are going to trigger you just like the things in life are. And if you can learn to deal with them on the charts, you'll be able to learn to deal with them in life. It's the same. How you do one thing's how you do anything. But that aspect, and I'll hand it over to someone else, that aspect of those time-based ranges, like that is, to me, it's everything. And the sequence that it happens like is always the same, right? And it's always doing this sequence based on time and the elements, which are liquidity, the way that I see it, liquidity, imbalances, which help me tell the story, order blocks, and also inside bars, because inside bars and seeing an inside print allows me to say, oh, I know where I'm at in this delivery sequence. I can know what's about to happen next, and I can read it accurately from that. And if you do it from the higher time frame, like I said, I'm always on looking from a 12-month, 3-month, 1 month. And then from that 1 month, I have it fractalized so I can see in time the daily chart. Where was the start of the month, end of the month, half the month? Where's the open price? And I know how price is delivering through that sequence and read it from that candle by candle by candle. But like I said, the main point, I guess, is just recognizing there's nothing new under the sun. So once you find that thing that he's been pointing to for so long, just marinate with it, because that in itself will help evolve you and allow you to see deeper the truth that he's pointing at. Um, but yeah, Michael, thank you for everything, man. You've completely changed the way that I operate, not only in the world, but in my own self through some of the ways that you've brought me closer to God. And I'll always be grateful for that. But that's all I got right now, guys.
My man, Focus coming in, dropping some sauce as he always does. We got a lot of folks here, got a lot of speakers. Want to keep them coming in. We got folks. Throw your hand up. We had Alfred here. I'd love to hear from him. I think I had Alfred up next. See if he's having issues with his connection here. But I see a hand up from somebody who doesn't follow me. So we'll just you're not as important, bro. I got an idea. Why don't you follow me, and then maybe I'll allow you to speak on the platform. Okay, is that okay? That's fair condition, isn't it?
I've just followed you, Kit.
All right, there we go, mate. Very good. Now you can wait your turn. Alfred, you're up. What's going on, buddy?
Yo, 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 what's up, my good sir Kid? Long time no
I'm
chat.
doing fantastic. How are you?
I'm blessed. Thanks a million for asking, eh? I see.
Yeah, man. From last night, late night to today, what's the word? What'd you hear when you listened to what ICT had to say? What's your reaction, brother?
First things first, I always love when ICT speaks. One of the major things I gravitated into was obviously not any one of these models or any shape or form, but when he says you gotta be ambitious, you gotta want this more than anyone. And I believe every single one of us here, the 600 of us listening, want this more than anyone. And in order for us to achieve this, to get to a goal where we are the most efficient versions of
Alfred, your audio's muffled.
Is my audio better?
No, your audio's muffled. It's been better. We've had connection issues today.
I see.
I'm not sure.
Give me 2 seconds, please.
It's just muffled a little bit. I mean, more than a little bit, brother. I'm sorry. I mean, you dropped gems. It was just tough to hear. It's a bummer. Alfred, see if you can't power down, power up, something. Get you back up here, brother. Or maybe you just want to try again. It's up to you.
Testicles. Can you hear me?
Yeah, I think we can hear you, brother.
So first things first, what I really gravitated into was ambition. We all have to be ambitious. One of my greatest struggles when overcoming myself as a trader, I was overly ambitious, meaning I spent more time than anyone else. Instead of me back testing for 1 hour, I would do it for 4. Instead of me back testing for 4, I'll do it for 7. And I would always add 2 more, 1 more extra hour into back testing, 1 more hour into forward testing. I would always want to do more than I should. And I failed to realize dismally as an executor that just because you're spending more time does not mean you're getting better. The goal is to become efficient, use your time wisely, and that time, the one you use to execute, to study, to backtest, to future test, that time that you use to allocate to bettering oneself within the financial market, it has to be short and intense so that you are able to retain the information that you have learned from the financial market. Just because you're spending 7 hours on the chart does not mean you're gaining 7 hours worth of experience. You are getting 7 hours worth of chart time, but that does not mean you're retaining that 7 hours of chart time. So it's very important for you to delegate your passion and navigate through it. And the more ambitious you are, I believe it's the harder it became for me, because I wanted this more than anyone. I spend more time more than anyone. And for me to get to a point where I realized that my own ambition, my own drive, my own hunger to do this is the one that's holding me back years. Once I had to change that philosophy and I had to tone it down a bit, where when I'm studying, I'm not studying because I want to spend 7 or 8 hours studying the charts. I'm studying because I have a certain schedule, whether it's 1 hour, 2 hour, where I'm studying a specific conceptual idea with utmost of attention, with the utmost of efficiency and the utmost of back testing. And that 2 hour is much easier to retain than if I'm spending 4 hours on the chart. And I believe every single one of us, the more ambitious you are, is the more well aware you need to be of your time management, how you manage the trader inside you, the analyst inside you, and the gambler, and you slowly you delegate time to understanding each and every one of them, and you're not spending 7 hours in front of the chart or in sort of screen time thinking that you're going to retain the information. That's not how it works. And for the longest time, I was stuck in a cycle of over executing. I was stuck in the cycle of over trading. I was stuck in a cycle where I knew what I had to do, I knew when I had to do it, but when the time came to deliver that model, I was either too over leveraged to hold to target. Because even though the same conceptual idea that will play out if I'm using the lowest form of leverage, I won't feel anything. It's much easier. Oh my goodness. I think they don't want to hear me speak, man. They freaking disturbing me. Give me a few seconds, I'll jump back up, man. Thank you so much, kid.
Listen to Alfred. We've heard from Focus. I want to bring in Machiavelli X. Is that? I mean,
How you doing, Kit?
I'm doing fantastic, brother. How are you? And what's your take? What's your take on what you heard?
Yes. Well, ICT's mentioned a few things here that might have, we've had the blessing from God through the conduit of Michael, to learn these things. What we have here is the most powerful trading information in the world. And to the people that are just starting to learn these concepts, don't shrug it off, because you're not going to find anything better. As anyone who's been listening to Michael for a few years, you will know that there is nothing better. The market is exactly what he says. It's swing highs and swing lows, rejection blocks for liquidity. And then you have in between, you have fair value gaps, and you have order blocks. Every turning point is going to be either a swing high or a rejection block for liquidity, or an inefficiency. And every entry, you're going to take an order block or a fair value gap. And the order blocks that have the highest probability are the order blocks which are followed by a fair value gap. Now, you've been blessed, whether you deserve it or not, you've been blessed with the most powerful trading information in the world. What you're going to do with that, it's up to you. But you have, I can't stress this enough, do not give up on this information, because you will not find anything better. There's a few points that Michael touched on today. You have the midnight pre-market range, or he calls it the midnight opening range. I sort of think of it as the midnight pre-market range because it's the first 30 minutes, and the opening range is the 30 minutes after the first 30 minutes of the hour. But that 12 midnight to 12:30 a.m. every single day, you're going to look at that very specific range of time, and within that you want to see where are the PDRAs, because this is, first of all, this is very influential because it comes down to power of three. This is the very start of the day. This is the first 30 minutes of the day. Midnight is true day. It doesn't begin at 6, it begins at midnight. The first 30 minutes, where are the PDRAs? Where are the displacements? Not the fair value gaps, because the separation between three candles is not a fair value gap. The fair value gap is the displacement. Where has, as the previous guest said, where has the elephant stepped into the room? Where is the displacement? Because this first displacement of the day within this very specific period of time, the first 30 minutes, midnight to midnight 30, the first elephant step is going to be influential throughout the day. How does price behave when it comes down into it or up into it? Does it reject it? Does it go through it? What time does it come? After 9:30, where do we open? Are we below it? Okay, we open below it. What do we do once we open below this first elephant leg of the day, elephant step of the day? Are we below it? Do we trade up into it? Okay, what happens once we reach this very important fair value gap, displacement? Do we displace away from it? Okay, we've displaced away from it. Now, how do we act when we re-enter this displacement away from this displacement? You know, you wanna study these very subtle things that Michael is dropping, because God, we're so lucky. I don't know if I don't know if Michael has some kind of NDA. I don't know if Michael is one of the coders, or just a student of one of the coders. I don't know what it is, but we are so lucky, and do not give up on this information, because you are not going to find anything better. I promise you. There's no amount of phantom trend lines. There's no amount of, God, animal patterns. None of this is going to help you. None of it. What is available at very specific times in forms of liquidity above and below the marketplace, and inefficiencies above and below the marketplace? How does price react from this very specific time, say 8:30, 9:30, 1:30? How does price react at these very specific points of liquidity and inefficiency, not just the separation between three candlesticks, displacement through a wick, through a turning point, displacement. If anyone picked up on this very, very key piece of information ICT recently dropped, it's one of his most recent 3, 4, 5 videos. It's a very short video. He made the distinction between a first presented fair value gap and a fake first presented fair value gap. I don't know, Kit, if you saw that video. A very, very important lesson, because not every separation between three candles or is a fair value gap, is a displacement. You need to see an imbalance through a wick, through a swing point. And okay, there's a few things that ICT has touched on. For example, you have the first presented fair value gap of midnight.
Well, let me ask you a real quick question, right?
Yes, sir.
Just a real quick question. Displacement's very important for you. What size do you look for? What's optimal for you?
When you say size
is as in you measure the size of the displacement. You're measuring the candle, the size of the range, what percentage or what pip value, what tick value, because it's so important, right, bro? You obviously know and have tracked and measure what displacement you look for to enter, right?
Yeah.
So what is that? Just curious for you. Do you need 60 pips? Do you need 40 handles? Do you need 10 points? What are you looking for in the way of an FEG for you personally to get interested? That displacement, because we know it's very important. Most folks don't. I know this because we talk a lot within the community, specifically about the 2022 mentorship model and where and how the importance of that inducement occurs after the rate and break in structure and the take of liquidity. But when people don't measure that, in my opinion, it should be quantified. Quantified because numbers don't lie. And I'm very much a numbers guy. Just curious, mate. Your average trade, your last trade, what displacement are you looking for?
Okay.
What size of displacement are you looking for?
So I'm not necessarily measuring in terms of ticks or handles.
Okay, but you are looking for displacement. What's that look like for you?
So what it looks like is on the 5, the 15 minute.
Is that a return? Is that a return back to equilibrium? Is that? So I'm trying to understand. You're very reverent with what you're saying in regurgitating what ICT is taught on his YouTube, and we all love it, and we all watch it, and we're all fans. I want to know personally, with that reverence and that tone, what's a displacement to you? Like, quite simply, like, what's the displacement? If it's not measured, what's a displacement? What's an inducement indicate for you?
So the way I would quantify it is not through ticks and handles. The way I would quantify it is there a swing high? Is there a swing low? And then does price displace out of that? And then does price have the energy to return back to it within those three candles? Because you have the first candle that frames the fair value gap. You have the second candle that displaces out of that first candle's range and it closes outside of that first candle's range. And then you have the third candle. Does it have the energy return to the first candle? If it does, then you have, either an immediate rebalance or, depending on the context, depending on the time, depending on the circumstances of the market, you could see a consolidation. But what I'm looking for is I want to see, does it have the energy to return? Because if it does, then my eyes are taken away from it. I want to see a swing high or a swing low. The second candle of the fair value gap, does it displace and close outside of that range of that swing high or swing low? Yes. Okay. The third candle, does it return to that swing high or swing low? If it doesn't, then I would say that is the displacement, to answer your question.
Rock on. 2024 Mentorship Lecture 1, August 5th. There's a really nice discussion. And again, the 2024 mentorship, where ICT is going to be talking a little bit more in detail about the importance of displacements and what to look for with the formation of FEGs and order blocks. So anyway, if you're interested, Lecture 1, August 5th, 2024 mentorship, we'll go over that a little bit more. The 2022 mentorship, definitely outlines very similar logic as well. And yeah, we got a lot of folks here. So Machiavelli, my brother, any closing
So,
thoughts as we move around the room here? I want to. I don't mean to interrupt. We just have a lot of folks here, right?
of course, of course. The last thing I would say is, you know, don't give up on this information. You're not going to find anything better. Look at the last. This is what I would say. You want to look at the regular trading hour gaps. You go on TradingView, toggle to RTH. Where is there a separation from the close to the open at 9:30? Has price traded back to that close? If not, then you have a regular trading hour gap, and price is going to want to go back to that at some point. And then besides that, you have the quadrants of that. You have the opening ranges with all of their PD arrays respective. You want to have the midnight pre-market range. You want to have all of the major displacements on the 5 and 15 as a minimum, and all the way ranging down from the monthly, weekly, daily. You want to look at all of these major displacements. You want to look at the first presented fair value gaps, not just a separation between three candles as we discussed. You want to look at the
I mean, the market structure shift is what you're really referencing, right? I mean, that's what we commonly refer
no,
to as the MSS, right?
no, because it's not just a shift above a swing high and a swing low. It's a displacement. It's a closure past that, and once it closes past, does it leave an inefficiency outside of that swing high or swing low? And then obviously the new week and new day opening gaps. These are real pieces of inefficiency the price is going to want to return back to. You want to have the previous 5 days highs and lows. You want to have the previous week's quadrants. You want to have the previous day's equilibrium. You want to have the wicks, the higher time frame wicks. Where was there a turning point? You want to have those gray pools which have been recently discussed. You want to have the session liquidity. You want to have time. You want to have you want to have the red, orange, and and especially nowadays, you want to have the yellow folder news where there's an FOMC member. Don't only have your Forex Factory news on red and orange, because you're also going to see, especially nowadays, you're going to see that yellow folder FOMC news is going to really mess up the market. You want to have the settlement price of the previous day. You want to have the opening range gap quadrants. Um, and, you know,
Yes,
To
we do
close,
know.
to close, don't give up on this information, because you're not going to find anything better. Thank you to ICT. Thank you to God for moving through ICT and helping us all. And that's it. Thank you, Michael. And thank you, Kit, for allowing me to speak.
Thank you. And for a follow up on what Machiavelli was saying, I would suggest that you go watch the ICT Charter Price Action Model 7 in the supplemental lesson. You'll find some things in the core content mentorship 2022, episode 6, minute 19. You'll hear talks about these displacements and inducements, although they are referenced within a market structure shift. But very good, fascinating take. Really like it. The topic of displacement is very, very good. Tim Rogers has got his hand up. We got Alfred here. We got my boy Pippi Banks in the house. So we're going to come back to Alfred right after Tim, who's got his hand up, jumps in and contributes a bit. How's it going, brother?
Hey, what's going on, Kit, man? I got my $10,000 and I'm ready to average
I'm
down.
ready to double. I'm ready to double my money. I'll put the money in the market. I just started doubling. Am I doing it right? Am I doing
No,
it right? That's all
I'm
I
trying to
want
see
to
if
know.
I'm doing it right, brother. Hey, Kit. Hey, man. You know I'm an old man, man. You keep kicking me out, and I can't remember what I was going to say, man.
Well,
Hey.
I know, brother, is when I put money in the market and I double,
Hey.
then it's a good day.
But check it out, man. I want to stay on topic. The topic is what did we get from Michael's Twitter space. I ain't finna go down a rabbit hole reteaching nothing, but I just want to say the thing I gleaned from it most was actually just confirmation that time is king, right? Time is king. Make sure you put time first. Put time first. Don't and I tell the gang this all the time. I be like, it ain't no such thing as a better PD rate. And he said it again today. There's no such thing as a better PD. It's time. It's all about time. What is if you understand the price delivery and the time aspect of it, it don't matter which PD array you focus on. And that's what I got from it the most. And go back and also he said, like he always say, just go do the work. Cause he always want us to go back and see how many times it failed. Because if you go back through and you looking at and see how many times it failed, you're getting your quantitative data of, okay, I got a 70% likelihood of this working. I got a 60% likelihood. If you go back and just do the work, you're getting your quantitative data. You know what I'm saying? And you got to base it all around time. But everybody want, like me too. I was there too. I want to jump to the 1 minute and get me a 500 handle run from the 1 minute chart because I got my 10,000 brother and I'm gonna double down every time it go to $6. But yeah, man, that's all I got, man. That's what I got from it. Time is king. It's just confirmation that time is king. Go do the work so you can get your quantitative data and just be patient and wait on time. Don't try to jump in. Like you see an impulse move and you try to jump in at any random time, and then you're wondering why you sitting in this chop slop. Time is king. Wait for the time. Strike when the iron hot. That's all I got, kid. I appreciate you, man.
Much love, Tim Rogers. Appreciate having you on.
And I'm gonna go double down with my 10,000, brother.
Well, at least he had like he was a WWE enthusiast, and he definitely had like the hacksaw Jim Duggan kind
Yes,
of
sir.
vibe, right?
He got the Macho Man Randy Savage. I got 10,000, brother. Snap to a Slim Jim.
Oh boy.
All right, kid, be easy,
Yep.
man. I'm back
Much
on mute.
love.
I'm
Much
listening.
love.
I'm listening while I paint my outside of my house.
Nice. I'm cleaning my garage, so it's kind of a good time, right?
Hey,
So
it's a good time, man.
yeah, good time. So heard from Tim Rogers. We got Focus here. We heard from the Machiavelli X. We got Alfred coming back, I hope. Then my boy Pippi and S Pill jumping in the convo here. But Alfred, you there, bro?
Oh, I'm here. First things first, who the fuck is Pee Banks, bruh? I love
Who
Pee.
the fuck is Pippi Banks, bro?
Welcome to the His Hour, man. Thank you so much. And I also love Tim Rogers, man. He's an amazing character. I do think now I won't be disturbed for the next maybe 5, 10 minutes, but
I mean, yeah,
obviously,
your phone was blowing up, boy.
yeah, and it's a freaking Saturday, man, and my baby sisters are upstairs, so I had to sneak in down here to the office. Just I'm like, nah, I can't miss kid space, man. Especially after ICT follow-up, like I can't. So, but just to continue down my train of thought, hey, one thing I gravitated into from ICT space is determination. Like you have to be ambitious. You have to want this more than anyone. But for me, sadly, ambition was a double-edged sword for me, and my ambition proved to be my downfall because my ambition led to so much impatience. You know, there's no more hurtful feeling where you know what to do, you know when to do it, you know what time, you know what model. There's nothing left for you to learn except to wait and just do it and execute and allow time to play leverage. I never understood that. I never understood that you can use time to leverage your models. So I always thought if I could do 20 handles now, that means I can go up and down these financial markets every single day. And that's true, I can now. But 5 years, 6 years back, I wasn't able to. And I was forcing myself to dwell in a reality which was not mine because I was over passionate. I wanted this more than anyone, or spending more time than anyone. Just because you're spending more time doesn't mean you're retaining more information. You know, just because you are investing more time than anyone, it does not mean you're becoming better, because you could be doubling down on bad habits. Here I am spending 7 hours doing the wrong thing and expecting to be better just because I'm doing it for 7 hours. That's not how real estate, I almost said real estate, apologies, I'm an investor as well, but that's not how trading works. It does not work like that. You have to get yourself within a schedule. You have to get yourself to a point where you know what you need to do, when you need to do it, and when the time comes, you don't hesitate and you execute at the utmost of efficiency. And to get to that state where you fully trust that time will be the ultimate equalizer. Time is your leverage. That's what I had to accept. I had to eat, sleep, breathe that. For 2 years, I ain't taking out shit money from the financial market. The market is not paying my bills. The market is not supporting my lifestyle. It's not buying my cars. It's just accumulating over time. And for me to dwell in that reality and sit in it for 2 years, that was the most toughest thing ever. But I had to do it. I had to force myself to be in a state where Trading is not meant to be a vehicle that makes me money now, but it's an investment vehicle that makes me money over time. It is the building block of my savings and how I accumulate a stockpile of money, so that when I'm executing, I'm not executing from a mindset of scarcity, from a mindset of I have to. I don't have to. I can trade now for I can not trade for the next 6 months and I'm still good. I still cover my bills. Can you say the same? And if you can't, then you need to get to a point where trading and investing is not a game in which at the end of the month or at the end of the week it pays your bills. No, at the end of 6 months or at the end of the whole year, you get your statistic on how you've accumulated capital from this investment vehicle, which you say is your model. It does not matter. Personally, I don't care what model you use. Doesn't really matter. It's all relative to the observer. Some of y'all don't. Some of us don't like. And we don't need a 90% strike rate. We don't need an 80%. I believe 70% is my benchmark. Anyone should have just at least 70%, especially if you're going to teach and talk about the financial market. You at least need to know the algorithm 70%. But if you don't, that's okay. You can make money through money management. Like for me, I swear to God, if you were to give me a model now that says, hey, Alfred, out of the next 7 trades you take, they're going to be losing. But the 3 ones you do win on will cover all the losses. I can't. It is impossible for me to dwell in that reality because I'm so fixated on the fact that I know the algorithm that the percentage, meaning if you know the market 100%, there's no one who knows the market 100%. I believe the most is 90, 95 if you're really pushing it. But if you know the market 80% of the time, that means you're good. If you're using a 1:1 risk to reward ratio, like you're killing the financial market. But not everyone wants to do that. Not everyone wants to get it right. No, not everyone wants to know when the swing point will happen. Some just want to make money. That's what we're here for. We're all here to make money. And if you can take 7 losing trades and 3 that you take are winners, and that's good for you, then that's the type of trader you are. I'm not. I'd rather take 7 small wins and then 7 small wins and 3 small losses. I don't mind that, but I want those 7 wins. I want to see myself getting better with every execution, and I want to leverage off my strike rate, leverage off my expectancy, and not really leverage my RR. I could give 2 fucks. I could use a negative RR because I know where the trade. And when I say I know, I'm not talking from a place of certainty. I'm talking from a place of seeing it 1,000 times. One of my favorite times to ever study on a 1-minute chart, I won't say it's time, but it's a range between 10:12 and 10:15. I love that. When it engineers a swing high at 10:12, the likelihood of me executing, let's say 10 o'clock opens and begins to spool high at 10 o'clock heading into 10:12, and 10:12 engineers a swing high, likelihood of me executing, depending on the market profile, depending on the environment, depending on the market delivery schedule, I'm going to go short at 10:15. That's a time-based model I have in my head. 133. If post 10, if post 130, we're spooling higher. Post equity open 9:30, and we continue spooling in one direction for a sustained period of time. Post 130, as soon as 130 hits, I'm looking from 130, 133, 136, and 139 to engineer swing high so that I can go short in and target the liquidities at the lows as it was running up. I expect that within the financial. It's one of the models I use, but those are time-based. And when you have these, you don't have fear. You don't have FOMO because you know what time your model will form. You know in what market condition your model will form. You know whether it will form when there's a news event. You know what type of conditions will form when you don't have a news event, and all these things, all these orchestra in terms of trading. I was very ambitious, but I wanted to do all of them at once. But sadly, that's not the case. I had to do one thing, and the one thing I had to do was trade on a Tuesday. One trade a week, every day, trying to catch the low of the week on a Tuesday. Because one thing that ICT said to me, that's the one thing that got me here. He told me that there's a 70% chance that the high or the low of the week will form on a Tuesday. So you're giving me a model with a 70% strike rate. I'm taking it. I'm gone with it. And I focused on Tuesday so much that I learned how to filter days in which I don't think Tuesday will make the low of the week based off Monday's range. But what you're always doing is you're studying a specific time and you're expecting it to perform a specific function. One of my favorite functions that ICT has ever taught was swing highs and swing lows. I love those. That's my favorite model, swing high and a swing low. I love that. Swing high and swing low into a fair value or inefficiency or order, doesn't matter. I don't care. I know what time they form. Do you? And you need to ask yourself these questions. You need to get to a point where you're not only studying price-based models, you're not only studying patterns, you're studying generic patterns in price action that recur every time at a specific delivery schedule. That could be a macro, that could be an hour, that could be 20 minutes, that could be 30, but there's a specific function of a swing high or swing low that will form on a 1 minute chart every single day. And this can be fractalized on a 1 minute chart, 5 minute, 10, it doesn't matter. But you need to find what gravitates to you. I love the 1 minute chart. No one can take me out of it. I came straight from a swing trader, from holding to 8 weeks, 4 week trades, 2 week trades. Now I hold for 8 minutes. My average is 21, and I'm blessed. I'm happy. I don't need to do anything more. And the bare minimum is enough for me. And I believe if you really want to master yourself as an executor, tame your ambition. Learn how to intensively focus on something for a certain duration in time, and that time should be a time in which you know you can retain that information, and you keep doing that over years. Because if I'm studying 1 hour a day and I'm studying something very specific, something very generic within price action, especially with me, when I'm studying a 1 hour delivery schedule, there's 20 generic swing highs and swing lows I expect to form within an hourly delivery schedule. And I'm studying those 20 times. And those 20 times should perform a specific function. Relative to that function that they serve at that given time will predetermine whether I execute short or long, or whether I can incur risk. But those reference points never change. And those reference points are time-based. They're not price-based. Like I believe FEG is like the first presented FEG. If you told me the first presented FEG that forms every day at 9:36, trade that. That's time-based. But if you say the first FEG, that's a time-based model. That's a price-based model, because it could form at 31, it could form at 32, 33, 34, 35. It's not static. And those are very hard for me to believe and trust. I love static models where I know what time it will form. And even if I don't know what time it will form, I will know from what schedule, whether it's 3 minute schedule, whether it's a 6 minute schedule, or whether it's a 10 minute. I know within this 10 minute, there's a specific function that the algorithm is supposed to perform. And those functions are only for consolidation, expansion, retracement, and reversal. And if I can trade those functions, my favorite is the reversal and the expansion. I love those two. Consolidation, I'm the worst. I'm the worst. Rejection blocks, I hate them to death. I wish they never existed, but here we are. I love turtle soups. Those are my favorite models. But in order
I
I won't lie
hate
to you.
rejection block.
I
I
hate
love how you
them, kid.
personified them.
I ain't gonna lie to you, kid, man. They piss me off.
Rejection blocks are not people.
They're not people. Thank you so much, kid. But that's basically all I have, man. You need to be able to tame your ambition. And when you tame it, you know where to focus. And when you know where to focus, you know how to intensively focus on one thing and do that well. And you can review within that 1 hour whether you did that one thing. Just because you're spending more time doing it does not mean you're doing it right. Just because you're spending more time doing it does not mean you're retaining more information. You need to be more structured, you need to be more specific, and you need to start thinking in years and not months and weeks. Start planning your life in years. And then once you do that, once I did that, that's how I got here. That's how I got here. By sacrificing all my needs that I needed to be done at that moment, the car I needed to buy, so I can rub it in my family's face, the money I wanted to make so that I can shove it down my teachers' throats, anything, like all those weird ambitions that I had to prove other people wrong that I'm good enough. I had to let go of those. And for 2 years, I had to do nothing. I just had to do the bare minimum, execute with efficiency, and let time heavy lift your money. But that's all I have for you. Thank you so much, kid. I need to go see my baby sisters. Blah, blah, blah. Thank you so much, kid. And I love you guys. Thank you, everyone who's here. I believe anyone who's listening here, you're destined for greatness. The more you sit with people who are not afraid to tell you their development, to tell you their stories, how they came about, and you're not really listening to their models because you might not know them, but listen to what they gravitate into in terms of discipline, in terms of patience, in terms of how they overcame by doing things in their journal, or how they interpret price, and how that aided them in finding contentment within their models. Because I can never convince you to love my models. I can never convince anyone. I believe I have the best models. Not because it makes me money in any shape or form. Based on my perspective and my experience relative to how swing highs and swing lows are formed, like there's no denying it. Just like ICT in terms of precision. If I can tell you what time the swing high will form next week, I can tell you my trade. That's perfection. That's the essence of mastery. You know, I never used to be able to do that. I was so naive where I didn't even know what the next candlestick would do. But now I can read every single candlestick like a book because I've intensively focused on one specific thing. And that intensive focus was not based on my need to prove something to someone. It was because it was structured, it was intentional, and it had a specific goal and a specific task. And the only thing that will allow this model, this investment vehicle to flourish is time. Time, not money, not handles, not pips, not leverage, time. And that's all I have for you. Thank you so much, kid.
I love that. Alfred coming in, dropping the sauce. Got more folks here hanging out. Just going to drop a little bit of sauce here real quick. My favorite PD array has got to be the midpoint between an open and a close. Fractally. God damn.
Sauce.
Yeah, I just thought I'd drop that here for the folks listening. Pippi Banks in his house. What's going on, buddy? You there?
Yo, yo.
What's goody?
What's good, bro? How we doing?
Doing great. How about yourself? Did you get a chance to listen to the space we just had? Or the previous space?
Yeah.
With ICT.
Yeah, with ICT. Yeah, I missed a little bit of it in the beginning, and then I tried to like rewind it back, and then I saw y'all was on. I was like, yeah, I'll go back to it later. But yeah, I missed those shotgun Saturdays, man. Those were like, I'm glad he's doing it again, because that's where the true gems are, right? Like, yeah, core content's good. Yeah, everything on YouTube is good, but the stuff that he drops in these Twitter spaces is unmatched. Like, the shit is great. Everything is great. One thing he definitely said that when I was listening back to it, I was like, yes. Focusing on that one PD array as a starting point, right? That is like super duper important, because most people, what they try to do, they try to utilize every single concept, right? They try to utilize every single concept. And when you do that, it's hard for you to see actually what's going on, because you're so focused on, oh, this form, this form, this form, this form. And now you're not even executing. Now you're just spotting the quote unquote pattern that you're seeing, because at that point it's not about trading. At that point, you're just using memory, right? And the analyst is not there anymore. Now you're just looking at memory, right? So when you focus on that one specific PD array and you get good with that, right? Nobody can take it from you, because now you know when it's gonna form, right? You know when it's gonna fail. You know when you're gonna enter, right? Because you've seen it so many times and you're sticking to that. It's hard to do that when you're trying to stick to 15 things at once. It's hard for you to specialize. So specializing in one PD array first and then gravitating towards other ones, I think that's like super duper important. And a lot of people, they skip over that part, right? A lot of people skip over that part because, yes, there are so many moving parts, and it's, oh, I see this, oh, but I also see this, oh, but I also see that. But if you dial into that one specific PV array, that will change everything. And then over time, you gravitate into other things, not taking away what you specialized in. And then you build your own system, you build your own model, you build your own way of viewing price, where you don't have to keep running back looking at videos. You don't got to keep doing that, because you already found your way. You already found your way. So I mean, I think that's like super duper important. That's like a hidden gem that people hear it, but they're not really hearing it, right? They hear it and it's like, yeah, yeah, that sounds good, but you know, I see, you know, the unicorn, right? So we got the breaker and then we got the fit. Like, okay, which one are you? What are you focusing on though? What is your focus? What do you specialize in? So I think that was important.
I
Shout shout
love
out
that.
ICT. Right, right.
Traders focusing on being a specialist, specializing in something versus. I mean, what would that be like? Just the ADHD, the monkey branch, the swing, the shiny silver object, all of those things. We all want to find the answers, but that's powerful, brother. And anyone listening, I would highly suggest really, really, really specialize in your model, in your framework, and what you're looking for. And yeah, bro, really, really good point, bro.
I mean, for me personally, like, there's two PD arrays that are super duper important to me, right? And you know, there's another thing he said. You know, like one PD array is not better than the other one, right? Like that's important because they can all be utilized if you specialize, right? But for me, the breaker and the all highs and all lows, like those are the most important PD arrays for me, right? The way that I trade. Do I see fair value gaps? Do I trade fair value gaps? Yeah, of course. Do I trade order blocks? Yeah, of course. But my go-tos, where it's like, oh yeah, this is the one. This is the one right here. All highs, all lows, the breaker, and you can actually throw in mitigation blocks alongside with the breaker because I trade both of those as well. So, but you know, it was definitely a good space. I definitely got to go back and re-listen to the beginning because I missed like a little bit of it. But yeah, I'm just glad he's doing it like a little more consistent, right? With those shotgun Saturdays because
We do love
those are
them.
the true gems.
The medium, the
I love it,
medium,
man.
the medium of X, of Twitter, whatever. Yes, there's a lot of negativity, but like in my opinion, like it's really impactful because there's real life people on the other side.
Yeah, yeah. I couldn't agree more, bro. Couldn't agree more. So it was good. It was definitely good. Definitely brings back like a little nostalgia. Because I used to always wait, right? I used to always get up on Saturday like, oh yes, it's fucking shotgun Saturday, right? I'm all excited and shit.
Bro,
And
it's a different.
you know, it's just good. It's just good. I love it.
I love it too. The X is a different medium. It's kind of wild. It's a really fun place to have an opportunity to have offline connection. Mr. Liquidity, you there? My phone keeps going on mute. I don't know what's happening.
Yes, sir, I am here.
How's it going, my friend?
It's going good. I'm speaking first time in space, Twitter space. I'm here to.
Are you there, buddy?
Yes, yes. Can you listen to me? Thank you, thank you. I'm here to thank you, ICT.
X is definitely bugging out right now, guys. I can just tell you the tech platform is not working optimally. It's kicking people out. It's muting. It's really weird. But Mr. Illiquidity, I would love to hear your story, brother. Tell us a little bit more.
Yes, it's my fourth year learning ICT, and overall, it's sixth year in the markets. And yes, I am learning, and 2024 was very different. Thanks to ICT, I can see now.
That's good, buddy. That makes me happy. That makes me very happy. Can you hear? This platform's definitely bugging out. We went from like 41 people, now we're back up to 400. People are coming in. I'm getting auto muted. We're bugging out here on the platform. So I don't know what to tell you except we're dealing with a few tech issues here. It's just what it is, unfortunately. But Mr. Liquidity, how do you engage with price, brother?
Okay. Mm, like all of you, I also use time. Uh, I mean, we can't use time, but I take help of it.
And how are you utilizing time? Are you using the sessions, the kill zones?
Actually, I am using same like that sell above midnight open and 9 for manipulations of the highs and lows before the entry. But uh,
Okay.
but uh, but the main thing is in my strategy. The main thing is 6. I mean, 50% of any candle. The point, the time. There, I anticipate the last leg of where where the candle is going, and it is working. It is working very good. Yes.
That makes me so happy. I'm happy for you, brother. I'm happy that you're seeing price clearly and that
Yes,
you're doing
actually,
well with it.
I am here not to talk very much. I am here only to thank you, Michael, sir,
That's
because
awesome. That's awesome.
I doubted him time and time again. But as I am also a programmer, C sharp programmer, I keep listening to his videos. And last year it clicked. It clicked all, everything. It clicked.
So she C sharp. Have you codified any strategies in Ninja?
No, I'm a C sharp developer. C sharp is a programming language. I
Yeah,
would
I realize that C sharp's what was used in Ninja Trader, right?
no, not for trading. I'm I'm a employed person. I'm working
Okay.
for a MNC. I'm a web administrator.
Rock on. Very cool. Very
Yes,
cool.
I'm from India, and in India, I'm from a very remote place known as Laul Spiti. And
Well, thank
here,
you for being here, brother.
yes,
Thank you for
and
being here, and
thank you also for letting me speak. It's
I
first
I
time
know
I
it's
have
nice.
spoken in Twitter or
Good.
in anywhere.
That makes me happy. I'm smiling, brother.
Yes, yes. Thank you,
Good.
thank you, ICT.
Jason. Jason Trades. Thank you, Mr. Liquidity. Great name, by the way.
Yeah. Okay.
What's going on,
Thank you
Jason?
for this.
I'm good. What about you?
Very well, sir.
All right, yes, I can see. All right, so first of all, the traders have pretty much said everything. ICT is really godsend, to be honest, and I'm not saying it from like the fact that I experienced this for myself.
Tell me about
What's the
your
turning point?
experience.
Yeah,
Tell
so
me
my
about your
turning point in
experience. How
trading.
you engage with price. Do me that favor. If
Yeah, all
you've
right,
already heard everything, tell me a little bit about
all right,
yourself.
all right. So that's
How?
how I engage price.
Yes, please.
So I've been trading ICT for over a year now, I think. But then the turning point for me was when I realized like less is actually more, because we have like ICT has like over 50 PDREs, right? But then which PDRE and at which time should they form? What array should they get to? Is it going to be a premium or a discount? So with this, I stumbled upon his 2024 mentorship where I heard of the 9:30 opening range, the opening bell. Then he taught the colors model. So that's how I engage price using the first presented fair value gap and just targeting an equal high, or if there's a clustering of new day opening gaps or new week opening gaps, that's my target. But preferably, I want to see two equal highs. So we have sell side equal lows, then let's say buy side equal highs. I want to wait, settle my hands and wait for like one of those liquidities to be swept before I engage price going back into the ring. So I'm looking for a market structure shift, a retracement into maybe like a discount array. It could be an OT level. Then I engage targeting equal highs. That's opposing liquidity. So yeah, that's pretty much how I engage price. And it wasn't like that at first because I had all the concepts in my head and it was mixed up. I didn't really know. I couldn't decipher where we are going to use this particular model and where we are going to use this. But when I realized the time and price aspect of trading ICT, right? And I was actually thrown off track because I was listening to people who claim they trade ICT, they sell these mentorship courses, and they don't really give you the whole source. So I really had to come to the main source, that's ICT's main YouTube channel. So that's why I started learning the 2024 mentorship for, and it's really been good because yeah, it has changed my trading for the better.
I love it. I love it.
Yeah. All right. So before I end, I'm going to say another thank you to ICT and God bless him.
Yeah,
Thank you.
that's awesome. I'm. That's great. Mister. Well, there we go. Like I don't know, man. My screen is bugging. We got Pippi back. We got S Pill here. I'd love to hear from S Pill. S Pill, did you get a chance to listen to the ICT space that we just had?
Yeah. Hey, what's up, Kit?
What's going on, man?
Everybody. Um, yeah, I didn't hear all of it. I heard some of it. It was good. It was good. What I heard was awesome. I'll have to go back and listen to the whole thing. Um, and then I heard part of hey, Kit, can you still hear me? I'm getting a phone call from
Yes, yes,
someone.
I can still hear you, brother.
Okay, great. Um, yeah, and then I'm just listening to this little follow-up here, and and it's great. It's great stuff. I mean, one thing, I could say something even to just some of the people that were just speaking, and the last guy, there's so many, like he was saying, like there's so many setups that you see, right? Um, because there, you know, we could be on opposite sides, we could be looking at different things, and so my point is, if you can just find one that you're going to say, I'm just going to trade, like this setup, whether it doesn't matter what it is. It could be the opening, first fair value gap. It could be like the overnight gap retracement, like ICT was talking about today. And he said something really awesome. He's like, you don't have to go for all of it. Just know that it's going to go towards like the unfilled gap, right? Whether it's the NWAG or the new day open gap. So like we get caught up trying to do too much because we see all these opportunities, right? And maybe just focusing like, just focusing on one and saying, I'm just going to do this one. And then when you get it, just be good with that. I mean, I had a great week. I only traded one day and I had a disaster happen. And then it really bugged me out. And then I was on simulator and just watching the whole rest of the week, which was like incredible. I haven't done that in a long time. And it's empowering because you don't have any pressure on you. You don't have anything that, any fear or any anxieties. You're just like watching the market and let it do its thing. Let me tell you what happened to me. And guess what? Things like this can happen. Errors can happen. Things are gonna happen, right? So on Monday, um, I was trading a real account. And well, it was a funded account, but it was the in the funded phase. And I was having some connectivity issues, and I was a little anxious, right, about just this trade. And I was in and out of trade, and it was working out. Like my wife came in and starts talking to me and starts telling me like this story, and I kind of had to listen to her, but it was like I was like annoyed because I couldn't tell her to go away because I was in a trade. This was during Asia, by the way. Um, and whatever, that's on me, right? Do one thing or do the other. And like I said, I was having connectivity issues, and I had to like disconnect and reconnect. And to make a long story short, I had 10 contracts like loaded into, so like when you hit buy, it like hits 10, right? But I only wanted to buy 3, okay? Because yeah, I've got my risk tolerance and stuff like that. I smashed the buy button and I ended up buying 30. So now I was in it for 30 contracts, and that was like something